Well, welcome. Today I'm joined by Josip Zdrilic. He's Head of Credit Structuring Research within the securitized team at Payden Rygel. Well, welcome, Josip.
Thanks for having me.
That's all right. I guess to start out with, can you tell us a bit about what securitization sector is within the fixed income universe? What's a securitized asset?
Sure. So it has attributes that we all, I think, could be familiar with if you understand fixed income. So first and foremost, it is part of the fixed income universe. It offers a range of fixed rate to floating rate. So there's a pretty healthy mix, how you want to take your exposure from the coupon profile. Where it sits on the yield curve is inside of 10 years. With maybe the center of mass sitting around like 3 to 5 years, but across 1 to 10s, you can find an exposure to fit your needs. That's commonality with other fixed income products. I think the distinctive feature that may be less familiar for some of the audience is just who the obligor is. So if you're familiar with corporate securities or if you're familiar with government securities, you're facing one obligor and you assess that obligor's ability and capacity and willingness to repay you, whether that's coupon or principal. In securitization, you're often facing a pool of borrowers or obligors. That pool has been perhaps originated by an entity and then through a mechanism of sales placed into a trust, and that is the source of repayment for your bonds. That presents to you a clean look into a risk profile that you may not get in things you may be more familiar with, corporates and government securities, thinking the consumer, thinking direct real estate, things of that nature. You get diversification because these pools, as we call them, this collection of obligors can number in the tens of thousands if you're thinking about the consumer, for example. And then finally, you have a capital structure on the securities that are offered from this pool. So if your priority is liquidity and you don't want to take credit risk, there's senior portions of the capital structure or senior bonds that you can invest in. Or if your risk return profile needs are different and you have higher hurdles to meet, there's subordinate notes that one can choose from.
So I guess in that sense then, can you talk a bit then about sectoral diversification? So a lot of us, when we think about securitized, we think about mortgage. So you're saying there's a bit more, there's consumer loans, auto loans, whatever. And I guess the other thing, does that sort of multiplicity, if you like, of underlying debtors that comprise the pool, does that have a material impact on credit quality? Does that increase, if you like, the credit quality of any particular securitized instrument?
Sure. So certainly mortgages takes the headlines because we all recall 2008 and mortgages really grabbed all the headlines and took the space into a negative direction. But there always has been a wide variety of exposures one can take in securitized format. And if you aggregate them into buckets and think about it like a menu board, you can see 4 major food groups on that menu board. Mortgages, reflected in RMBS or residential mortgage-backed securities, I think most people have familiarity with, but there's its cousin, which is CMBS, right? So that is the commercial mortgage equivalent. That's on the menu board as well. There's a big broader bucket called ABS or asset-backed securities, and that represents a wide swath of non-mortgage related instruments that you can take exposure to facing both the consumer and commercial obligors in pooled fashion. And then finally, there's a distinctive element on that menu board, CLOs. So that's corporate collateralized loan obligations, which the pool of assets responsible for payment are corporate loans.
Right. Well, I guess financial markets in general have had an interesting 2 or 3 years. We've had COVID, we've had the Russian invasion of Ukraine, we've had what was transitory inflation developing a little bit more inertia than certainly markets or central banks certainly originally countenanced. What has that sort of environment meant for the securitization market? And what does it say about the opportunity set within securitization markets as we sit here today?
Right. So the response function of the securitized market to everything that you had sort of described that's transpired over the last 12 to 18 months, in our opinion, has been pretty good. So if we were to grade and assign a letter grade, we'd give it a B, a solid pass with room to improvement. And I'll try to explain why. First, pricing. The risk premia associated has increased meaningfully.
Right.
With the broad stroke, you can say you're getting double the spread today that you would have gotten in recent history.
Double the spread on a higher absolute rate too, is that right?
Exactly. So the other component there would be the benchmark rates. So if you just, cherry pick, we can cherry pick for a second what 2021 represented versus today. In 2021, you had benchmark yields near zero, and you had this insatiable reach for yield dynamic across the investor base that really compressed spreads. So there was no differentiation around quality if you looked at a certain set of cohorts. And so that wasn't a very good dynamic. If you fast forward to today, your benchmark rates are much, much higher. So your starting point is far more advantageous. And the spread on top of those benchmarks, as I said, has doubled. So if to put some numbers around that, your high quality senior portions of those capital structures, your senior bonds, if they were 50 basis points, they're 100 basis points today. Your mezzanine parts, your IG, your investment grade opportunity set, if they were low 100 basis points in 2021, they're double today. So they're 200, north of 200 basis points in addition to those yields. And you can march down the credit spectrum and you see a similar relationship.
Right. I guess the issue that's confronting markets today, I did talk about, COVID and war or geopolitics and then inflation. I guess the issue that's confronting markets today is the prospects of recession. Can you say a little bit about, what you're thinking in terms of a recession and how that might impact upon the attractiveness of the sectors within the securitization universe?
Mm-hmm. So within securitization, when we sort of laid out the foundation of what is securitization and what's the ranges of duration and you have senior and subordinate notes, when you think about that menu board, you can position yourself accordingly for the prospects that you see moving forward. And how we elect to do that today, given the uncertainties that you spoke about, is we seek to move toward the shorter end of the yield curve.
Given the curve is inverse,
Exactly. So there's a couple advantages to that. One is it's a defensive.
Sure.
It's a defensive move against adverse market rates. Two is you're picking your benchmark where it's most advantageous with an inverted yield curve as it's presented today. The second thing that we'll overlay on top of that is we seek structures that are debt friendly. And what I mean by that is there are some structures, in particular within ABS, that force a deleveraging of those notes. So in addition to pricing off an advantageous curve, they're short in duration.
Right.
So your need to forecast is in a more near-term window where you should be most comfortable around estimation. The structure itself is very friendly to those debts, and it forces a delevering through the cash flows that get applied through the waterfall. And so we find a lot of value in this pocket of the securitization market today.
Well, thank you, Josip. I certainly hope that the viewer found this instructive. I certainly did. It's a little bit of a niche sector within the fixed income universe, and I think what we can sort of garner from what you're saying today, it's it does provide some opportunities in terms of being able to access reasonably high credit quality. And as you spoke about with the doubling of spreads, fairly attractive yields as well. So thanks again, Josip, for joining us today.
My pleasure. Thanks for having me.